It's Market on Close. I'm Caroline Woods in for Oliver Rennick. Joining us now for his usual Friday appearance is Phil Strebel, Chief Market Strategist at Blue Line Futures. Phil, thanks so much for joining us. Great to have you.
Yeah, thanks for having me. What a wild week we've seen this week, and it was another one just back to back. It seems like the volatility won't stop with the new administration.
It's interesting because it has been a wild week, but then if you actually take a step back and look at the weekly performance for the major averages, the Dow's down 0.5%, the Nasdaq is flat, the S&P is down 0.25%, Russell a little bit more than that. So if you just zoomed out and looked at the weekly performance, it would seem pretty sluggish, but certainly not without a whole bunch of headlines. So I guess what's your take or the takeaway from this week's news flow?
It's spot on. It's a lot of volatility and back and forth action. I mean, one point when we saw the S&P at 6123, it looked like it was going to break out to the upside, and we were running to new all-time highs. And then just you fast forward about an hour or two, and then we start to hear some of these new developments here, talks about tariffs, things like that. The investor just doesn't want to have a whole lot of risk going into these weekends here. Look at the equity markets. I mean, we just came off of the lows. So just a lot of volatility out there in the markets. People want to really kind of adjust their strategy, especially on the futures contracts here, kind of maybe scale it down a bit as far as contract sizing and its positioning is concerned.
And speaking of tariffs, it seems like tariffs and maybe inflationary concerns getting the best of stocks today in terms of the major averages being lower. We also have Amazon lower after earnings. The Mag 7 has been mostly punished following earnings. And then we have President Trump saying that he's going to announce reciprocal tariffs next week, early next week. What impact do you think that could have on both stocks and bonds?
I mean, generally, the reasoning for behind that is to reduce tariffs and ease trade barriers and make it easier and cheaper for goods to flow amongst countries that mostly border each other in a lot of the South American countries. I think we're going to pay attention to a lot of the agricultural markets. We saw them come off. Corn has been one of the better performing commodities, better performing agricultural commodities, and has the same performance as the gold market. That's one thing to watch. Also, livestock. Also, some of your metals and a lot of your metals that are utilized for different things like automotives that come into this country. So we're going to want to pay attention to a lot of different moving parts. It's just very interesting how these commodities are just moving so much and so dramatically from one moment to the next. I mean, something like crude oil is having a couple dollar range every single day. Silver's having a dollar range almost every single day.
I was going to ask you about crude oil because it's down about 4% on the week. Trading, it's actually a little bit higher today, up about 0.5%, but just below $71 a barrel. Seems pretty much stuck in a range, huh?
Yeah, but I could tell you from the last go around that no matter what price that there was on crude oil, President Trump was very critical of it, saying we got to get crude oil prices down. Even when it was at $50, he was trying to hit it down. Now, oil prices, I believe that they go somewhat on sale from a longer term investing standpoint. Once we get into the mid to high 60s, I think that oil prices haven't factored in if we did take, full measures with Iran, if there are some hiccups on getting a lot of this supply involved. And if the economy does get past a lot of these tariffs and really start to accelerate again, and we see the tariffs kind of ease against China and things like that, that could be a small tailwind for the energy markets here. So I think that they're more range bounds at the moment. But again, you got to keep your head on a swivel.
Okay, and gold hit another all-time high today. Obviously, gold has been, popular for quite some time, even when the market has been in rally mode. But do you think the flight to safety makes sense given the volatility that you've talked about and so much uncertainty?
So many driving forces behind the gold market right now. Everything from central bank buying to investors coming in to stagflation fears to 1 minute the Fed's going to cut 2 times, now only 1 time. We got to protect ourselves against tariffs. A lot of people look at it as a long-term hedge. I mean, gold has proven itself decade over decade that it is a great asset to own. Every investor should have some kind of correlation or some part of their investments tied into a hard asset like the gold contract. CME launched a 1-ounce gold contract that we're looking forward to incorporating in some of our client portfolios. But I think that gold looks like $3,000, very achievable target here. And it was a long-term target. Now it's a near-term target. And I think we got to look beyond that to 4,000 and 5,000 as the years go on.
Okay, and then Bitcoin is down about 1% right now, just trading above 96,000. I was going to ask you about the resiliency we've really been seeing in Bitcoin because when the market first, kind of started its sink lower, Bitcoin was holding on to its gains, and we were seeing some dispersion there, which they've really been trading hand in hand for seems like quite some time. But it ended up following suit and falling. Seems like Bitcoin is really stuck in this range as well. What's going to break it out of, and go back to the highs and potentially even higher? Do you think that's a possibility?
The lack of volatility in the market will really benefit from it. People actually shy away from Bitcoin because they're concerned that they're going to wake up on overnight and see it down $10,000. That's not a currency, that's a commodity when it trades at that range. It trades like something like cocoa or coffee when you're moving that much. But when it has stability and it adapts itself as a stable coin, you'll see it incorporate and broad out more the exposure of people have it. Then you'll start to see central banks, sovereign wealth funds incorporated into their balance sheets. It'll be accepted in 401ks and pensions funds. And that's when it's the rising tide that lifts all boats. And I think that many of these cryptocurrencies do well. And I think Bitcoin, 150 to 200,000 by the end of the year, I believe is easily achievable.
150 to 200,000 based on the fact that you think it will just become more mainstream.
110%. I mean, I'd rather own that asset class than many of these other currencies out there that are just being beaten. You'd be better off owning Bitcoin than you would be owning something like the Aussie dollar, the Japanese yen, even the Mexican peso recently. All these particular currencies have achieved new lows, and that's how you look at it against things like gold. Gold has reached record highs against every major currency out there, and I'm sure if you did that same kind of structure on Bitcoin, you'd see similar results.
Okay, and let me ask, are you using Bitcoin, or are you just using it as kind of a hedge?
No, I haven't bought anything with Bitcoin yet, but maybe I'll do a Super Bowl bet. There's probably some website out there that's accepting Bitcoin, So getting it back might be the problem, though.
All right, so tell us what's on your radar for next week. Get us prepared as the traders kind of de-risk heading into the weekend.
Jerome Powell is speaking on Tuesday, and you do have CPI on Wednesday. You've got the PPI and unemployment claims, and we've got retail sales. I think there's a ton of stuff out there that's really going to give a reflection of the investor and of the retail person out there. But I'd really like to see Jerome Powell on his testimony. What does he think about these things? I think that he was wise on holding interest rate pats, because 1 minute it looks like inflation, next minute it looks like deflation, next minute it looks like stagflation. So we'll see if he could navigate us through some of these headwinds.
Okay, and just finally, the 10-year yield currently sitting just below 4.5% right now. You think that's where it should be?
Another head faker. I mean, it looks 1 minute that's going to break out, next minute it's rising. So we'll see with the CPI data, which should show an uptick here. I think we'll see a little bit of a bump up in there, but then we'll probably see the top. But I think that holding the 10-year yield around this 4.5% kind of makes sense right now. We are seeing some steepening of the curve and some questions surrounding that. I know I just did a lock on a house, a 30-year lock, so I'm a little concerned that I might have been a little bit overzealous here, and I should have waited. So we'll see what happens.
We'll leave it there. Phil Striebel, Chief Market Strategist, Blue Line Futures. Thanks so much. Have a great weekend.
You too.